Money FM 89.3, best of breakfast. Mind your business, only on Money FM 89.3.
Money FM 89.3, Audrey Seek here with you on Mind Your Business. The tech industry has been on a wild ride. You may have heard of the term a tech winter, where there's an overall slowdown in funding and growth. But now there's also what's being called the tech fog. It's a whole new phase of uncertainty with longer investment cycles, funding gaps, and big challenges for startups, investors, and key players in the game. Now, according to Kickstart Ventures, a venture capital firm investing in startups in the Philippines and beyond, the old playbook just isn't cutting it anymore. Startups need a fresh approach, one that's all about resilience, adaptability, and purpose-driven growth. So what does that actually all mean? How can businesses navigate this tech fog and come out stronger on the other side? We find out the answer with Jecky Pelaez, partner at Kickstart Ventures. Good morning, Jecky. How are you doing today? Welcome to the show.
Good morning, Audrey. Thanks for having me. Happy to be here.
It's great to have you on. So let's start with the big picture here, Jecky. How would you describe the current global tech ecosystem and what major trends are emerging that we've been seeing?
Sure. I mean, as you mentioned, like over the past 2 years, we've been at this so-called tech winter, right, where it's been harder to get funding. It's been taking longer to get funding. Like we've been in this persistent like tech winter for the past 2 years, right? Where funding gaps are taking longer. Before it used to, now it's taking like 30 months. Before it was half that. And like funding deal sizes are shrinking. But the thing about this, like we've been in the tech winter. So think of it as taking the haymaker punch at the very start, right? And now that over the past 2 years, like we've sort of figured out, or we're starting to figure out like, okay, how have things changed? How have things adapted? Like, what are we asking startups now? What are we asking them to deliver that's changed over the past 3 years, like during the heydays of the pandemic when funding was like through the roof, there was a lot of liquidity going on. But now that that's changed, like how are startups making those changes and how are we navigating through that? So the way we like to call it is now we're at this tech fog, right? Because now that the winter is settled, there's still a bit of a fog going on. We're still tweaking, we're still adjusting, but startups have made those adjustments, right? So now we're all trying to get through this fog together, and hopefully there's like a light at the end of the tunnel.
Yeah. So this idea of a tech fog, which is a period of prolonged kind of uncertainty, can you perhaps explain what you mean exactly by a tech fog and the difference between a tech winter and a tech fog? Is it much better than a full-blown winter? And how is this impacting both startups and investors?
So I would like to think it's better, right? Because when you're thinking about tech winter, it's really like, it's the initial freeze, right? Yeah. A lot of startups and investors, they're still trying to figure out what to do or what the playbook should be to get out of this winter. So like when winter hit, funding cycles are taking longer. They still are taking longer. Deal sizes are still a little bit smaller than they used to be. But we can see that we've already hit this like over the past couple of months or the last year or so, the deal value for like early stage companies have been kept at a level pace, right? So they're not going down anymore. We're keeping at a level pace. So that means that, okay, there's already some sort of certainty that this is the new reality that we're in, right? But now that we're in this tech fog, like what has changed, right? And so that's the playbook on how to like get startups out of this tech winter and into this tech fog and hopefully into tech spring. So before the whole tech winter, everyone was talking about growth, right? The playbook was, you have to grow. Like if you're in e-commerce, your GMV has to grow consistently. But now that we're in the tech fog or in tech winter, everyone started to pivot towards profitability. Now we start to ask, like, okay, how are you going to get to profitability in this period? Like before we were talking about, okay, you can be profitable in maybe like 8 years. Now how can you do it in like a shorter period of time? How can you get profitable in between 3 to 5 years, right? So those are the things that have changed over time, right? So now, like, the demands from startups are different. But now that startups know of these demands from investors and their stakeholders, now we can, like, move forward and startups can act on these demands a little bit better because they're so used to it now.
Yeah. So you talked about the startup playbook and the need to kind of move away from the traditional way of doing things because of all of the changes that have been going on. So what does this new playbook look like? You know, what are the key strategies that startups need to adopt now to stay competitive?
Yeah, thanks, Audrey. So as I mentioned earlier, previously when you got funding, like the playbook was really a sprint to growth. Investors and founders, they'd employ aggressive growth strategies. And when we were looking to invest and investors, a lot of it was really looking at top line revenue. Like what's your revenue, or if you're in e-commerce, what's your GMV, right? And it was, you got the money you spent on marketing and growth, and then you raise again, and hopefully you keep doing that. And then at some point, once you reach that scale of growth, that's when you can start to work on profitability. But nowadays, we're starting to look at, okay, it's not a sprint, it's a marathon. Like how can you get to sustainable profitability within X number of years? Now that there's heightened scrutiny on like your business model, how can you get to gross profit margin positive within X number of years? How can you get to beat the positive margin within X number of years after profit margin, right? We're starting to ask questions like, okay, is your product, what happens if you stop marketing on your product? Is it still going to be able to grow? Are you still going to be able to acquire customers, win users, even without marketing and all these discounts that you would give? So that's how things have changed.
Okay. And as a partner at Kickstart Ventures, which is a venture capital firm, what qualities do you look for in startups and SMEs before deciding to invest in them? What makes a company stand out to you?
Looking at startups hasn't really changed much on how we view founders. I think the way we like to look at startups at Kickstart is we like to look at 3 or 4 things, right? We like to look at your team. We like to look at your traction. We like to look at your tech and the timing. The team, I think, is most important, especially if you're early stage. Like, what are the qualities a good founder should have, right? Like, aside from solid business fundamentals, we look at the overall team composition. Like, are they able to execute and execute according to their vision? Are they open enough to take feedback well? Are they quick enough to synthesize and gather all these data points? I think which is one of the key factors on looking at founders. It's the ability to gather information, especially in the market that they want to operate in, and synthesize that and quickly make a decision and execute on that. And if it doesn't work, they can pivot away from it and not just like stick to it and just burn cash, right? So it's good to have that sort of balance of the team that's able to give all these different qualities in running a business. So one could be good at execution, other one would be good at like financial operations and operations itself.
Okay, well, Jecky, beyond your role at Kickstart Ventures, are there any personal experiences that you can share or lessons that have shaped your understanding of what it takes to build and sustain a successful business?
Personally, I think having a good awareness of solid business fundamentals is very helpful. I'm pretty sure a lot of people who are in business will tell you, like, you always have to know what your cash flow is like, be aware of your costs, your margins, and be disciplined about that. The other thing that I've seen a lot is good founders are the ones that are able to be open to feedback. They seek help from investors, fellow co-founders. They're not shy to ask for advice. And when they do take advice, they're not like, oh, I don't want to take your advice. I'll take it. I'll synthesize it. I'll take other data points. So I think that's the other thing, right? I think Adam Grant said best, right? Like the hallmark of like expertise is that we have so much access to information, but the ability to synthesize this is what will be the difference maker in good leaders.
Yeah, all right. It's a marathon, not a sprint, and it's all about long-term viability and not just short-term growth. This was such an insightful discussion on how startups and businesses can navigate this tech fog with resilience and purpose. Jecky, thank you so much for joining us on Breakfast today. Really appreciate your time.
Thanks, Audrey. Happy to be here.
Thank you.
Take care.
You too. That was Jecky Pelaez, partner at Kickstart Ventures. Keep it here on Money FM 89.3.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.